Some truths change nothing in your life. Others change everything. Billionaires are not magicians. They simply follow a set of rules that most people ignore. Rules about how money should behave, how risk should be managed, and how time multiplies wealth. Today, you're going to learn the 8 financial laws that the world's wealthiest quietly apply and how you can use them, even if you're starting small.
Law 1. Every dollar must have a job. Before you spend a single dollar, ask one question. What job is this money doing for me? Billionaires never let money sit idle. Every dollar is either working to earn more, protecting something, or buying back time. Think about it. You can spend $300 on the latest phone, or use the same $300 to buy an online course that teaches you a skill that pays for the rest of your life. One gives you pleasure for a moment. The other keeps giving forever. When you make this shift from spending to assigning jobs, your money starts compounding automatically. Action step. Look at your next purchase and ask, will this make me richer, smarter, or freer? If it doesn't fit any of these 3, reconsider it.
Law 2. Quiet ownership beats loud spending. The rich don't show off. They accumulate. The poor want people to see their money. The wealthy want their money to work. A millionaire doesn't need to wear designer logos because his money is busy owning pieces of companies you've never heard of. For example, a normal person might spend $80,000 on a flashy car. A billionaire invests the same $80,000 in dividend stocks or private companies. The first loses value the moment you drive off the lot. The second quietly pays you every quarter. Quiet wealth doesn't scream. It compounds. Action step. Set a goal to invest at least 20% of every raise or extra income into assets no one can see, but that silently grow behind the scenes.
Law 3. Leverage. Multiply your hands, time, and capital. One person's time is limited, but leverage breaks that limit. Leverage means using other people's time, skills, or capital to multiply results without multiplying your effort. When Elon Musk builds a company, he's not working harder than you. He's leveraging thousands of employees and billions in capital. You can do the same at your scale. Hire freelancers, automate your tasks, use credit strategically to buy productive tools. Example, if you borrow $5,000 to buy equipment that increases your monthly profit by $500, you've created a 10% monthly return. And after 10 months, the loan is paid off, but the equipment keeps producing profit. That's smart leverage. Action step. Find one activity this month that you can delegate, automate, or scale through a small investment, and watch how your income per hour jumps.
Law 4. Money loses power when it stays still. Your cash flow is like blood. If it stops moving, it dies. Money sitting in a checking account is not safe. It's shrinking because of inflation. Every day, your $1,000 becomes worth $995, then $990, quietly eroding. Billionaires never let money sleep. They keep it cycling from profit to investment to reinvestment. Even short-term parking matters. A smart investor uses high-yield accounts, short-term bonds, or automated transfers to make sure idle money earns something every single day. Example: if your $10,000 sits in a 4.5% annual yield account, that's $450 per year, earned for doing absolutely nothing. Action step: Set up an automatic transfer that moves leftover cash every week into a high-yield savings or brokerage account. Make your money move even while you sleep.
Law 5. Protect the foundation before you build higher. Most people think wealth starts with investing. Billionaires know it starts with protection. They separate their personal assets from their business assets. They use LLCs, trusts, insurance, and contracts to make sure a single mistake doesn't destroy everything. Here's why that matters. If someone sues your small business and you've mixed your business money with your personal account, they can take both. If you had a separate legal entity, your personal life remains untouchable. It's not about paranoia. It's about peace of mind. Even the average person can apply this. Get basic liability insurance, keep personal and business bank accounts separate, and never use one credit card for both. Action step. If you run any side business or freelance work, open an LLC. It costs around $100 to $300 depending on your state, but it can save your future.
Law 6. Debt is a tool, not a trap. Poor people see debt as poison. Rich people see debt as fuel. The difference is what the debt is used for. If you borrow $1,000 to buy clothes, that's a trap. If you borrow $1,000 to buy a camera that earns you $300 a month, that's leverage. Good debt creates income. Bad debt creates anxiety. Wealthy people borrow at 5% interest to make 10 to 15% returns. That small difference, compounded over years, creates millions. Example: if you invest $20,000 borrowed at 6% and make 12% returns, you net $1,200 profit yearly after paying the loan, without touching your own cash. That's how real estate investors grow fast, not with luck, but with math. Action step. Before you borrow, ask, will this debt make me richer or poorer? If the asset pays for itself and still leaves profit, take it. If not, skip it.
Law 7. Information is the most profitable asset. Money follows awareness. Those who see trends before the crowd always win. Billionaires invest heavily in information. Market reports, insider data, conferences, and smart advisors. But you don't need millions to start. You just need curiosity. The earlier you notice where attention, regulation, or demand is moving, the earlier you can act. Think about it. The people who learned about Bitcoin in 2012, or AI in 2019, or real estate zoning changes in 2020, all had the same opportunity. The difference was knowledge and timing. Action step. Dedicate 30 minutes each week to studying an industry you care about. Read its trends, laws, and forecasts. Information doesn't just open doors. It tells you which doors to knock on.
Law 8. Fail cheap, learn fast. Billionaires don't avoid failure, they budget for it. They test ideas on a small scale, fail quickly, learn, and move on. That's why they succeed faster. They've already failed 100 times more than most people even try. If you want to grow your income, start running micro-experiments. Try a $50 ad campaign. Launch a tiny online product. Offer a service to 3 people. If it fails, you lost lunch money. If it works, you found something scalable. Failure is not the opposite of success. It's the price you pay to reach it cheaper. Action step: set aside 2 to 3% of your income for experiments. Every month, try something new that could grow your money or skills. You'll be surprised how quickly one of those cheap failures turns into your next breakthrough.